Hello everyone and welcome to Infonox Market Insights with me, Richard Perry, analysing markets for Infonox on Monday the 14th of March. Now markets have started fairly positively. There was a strong sell-off into the close on Wall Street Friday. However, there's been a rebound on Monday morning following on from seemingly constructive talks between Russia and Ukraine over the potential for peace talks. Yeah, I mean, whether you take that with a big pinch of salt or not, it depends really, because obviously the Russians are likely just to be playing the game. But seemingly at the moment, markets are taking this as a positive. How long that lasts for remains to be seen, though. We do see that commodity prices are falling away on the back of this. Also, given the fact that the US dollar is continuing to remain strong, is also a key component there. Equity markets are the main beneficiary at the moment, certainly European side. Whether Wall Street catches up remains to be seen also. But there's no real data to get too worried about today. Markets will be looking towards the Federal Reserve meeting. This is the March meeting, and it's going to be the first rate hike coming through from the Fed this week. So markets will be certainly focusing on that in the next couple of days. But generally speaking, no real economic data of note today. So the charts we're looking out for, I'm looking at euro-dollar, which has just started to move lower again. We had dollar strengthening in the last couple of days, and it certainly looks to be weighing on euro-dollar once more. I'm also looking at the gold price. Again, dollar strength does weigh on gold, but also signs of potential peace talks is also a reason why gold is falling back as well. But we'll look at the technicals there. And finally, look at the DAX, which is in recovery mode, but can it continue? So let's have a look. So onto the Infonox MT5 platform, and starting with euro-dollar, we can see since that ECB meeting where euro-dollar did move to hit that resistance at 111.20, but then fell away. Inflation numbers and the strengthening dollar since that on Thursday, Friday has really hit euro-dollar to the downside. We can see two negative candles. Found a degree of support this morning. However, how much that really holds is going to be important, because obviously we do have the resistance that's now building up overhead on the 4-hour chart. You can see 11.20 and the reaction high that we had at 10.40 on Friday. Clearly 10.40 is now the lower high, and you've got this more falling over element to it. There was a degree of an uptrend, you could have argued, on Thursday, but that broke on Friday, and it's now sort of pressurizing to the downside. You've got initial resistance at that 109.60 level. That's a bit of a pivot there, but clearly 110.40 is the key reaction, lower reaction high on euro-dollar now on a near-term basis, but it looks as though it's just starting to sort of form lower highs, lower lows, and moving back towards a test of that key reaction low of 108.05 once more. Gold chart is interesting because we've had this uptrend on gold, well, for the last month or so, since the issues have been sort of really taking hold of between Russia and Ukraine, and it obviously accelerated to not far from the all-time high, 2075, but 2070 was that reaction high. Then fell away, and it's starting to sort of fall quite consistently, lower highs, lower lows, but it's just drifting actually in the last sort of few days really, and it's drifting in this consolidation back towards this uptrend. And it'll be interesting to see on the 4-hour chart whether the 4-hour RSI goes below 40. That's what I'm looking for. If that goes below 40, then that would suggest, I think, pressure on that uptrend and potentially to break that uptrend. But just for now, it's still consolidating. The reaction low on Friday of 1958 is the support that we're looking out for. That uptrend comes in at 1947. And finally, the DAX. In this recovery we've seen, a really strong recovery early part of last week, and then consolidated into the close on Friday. The selling pressure on Wall Street hasn't really affected the DAX too much into Monday's trading, and we've still got this uptrend in place on the recovery. And I've got this band of resistance here. You can see this old lows and become reaction highs as well. So that's a key level at 14,100 on the DAX, and if the market can get back above that, then that really does move into more positive outlook. And you can see here on the 4-hour RSI above 50 consistently, that suggests recovery, and you've got the uptrend, and also this is still just essentially a recovery back towards what would be that downtrend that we've had through 2022. However, obviously we saw the massive acceleration to the downside, so there's a lot to recover still to the upside. Big resistance overhead coming around 14,800, but for now 14,100 is the resistance and needs to continue to go. Obviously the key reaction low on that move is 13,275, and that's the key support. Thanks for watching this video. I hope you found that informative for your trading. I'll be back on Wednesday to have a look at the Federal Reserve meeting and some more chart analysis. So I'll leave you with the Infinox support and resistance table, and I'll speak to you then. Thank you very much and good luck in your trading, everyone.